Good morning. You're watching Business World Live. I'm Danie Laurel. It's the start of a new trading day, but first let's go straight to our top story. The country's pandemic response has pushed the government's outstanding debt to a new high of 10.3 trillion pesos as of January. Data from the Bureau of Treasury showed that the debt pile reached that amount after the government borrowed another 540 billion pesos from the central bank to boost its pandemic-related programs. This January number was 5% higher from nearly 9.8 trillion pesos in December and up by 33% from 7.7 trillion pesos in January of 2020. Domestic borrowings made up 71% of the debt stock, while the rest came from overseas sources. That means domestic debt amounted to 7.3 trillion pesos, while external debt stood at 3 trillion pesos. Kicking off the markets report with a quick health check on our local unit, the Philippine peso. You can see that on my terminal here. This is from Bloomberg. The peso has now slumped to its lowest level in 6 months last week. That's following, of course, an extension of the coronavirus-led curbs and also the delays in vaccine rollouts. But for now, of course, these delays seem to be being addressed. So we'll see how the peso performs moving forward. Nevertheless, according to Bloomberg Analyst, the losses have so far been limited to the near at least the dollar pesos 200-day moving average so far. So at least they are hoping that this will hold in the near term. There is, however, expectation that U.S. yields will be rising further and sentiment is still cautious towards the peso. Right now, it is among Southeast Asia's worst performing currencies this year. It's down by 1.1%, at least for the month of February. That's also, as we've seen, an exodus in terms of net foreign selling worth $171 million sold during this period. But a lot of eyes are going to be on the February inflation print, which is due on Friday. Now, let's take a step back and take a look at how U.S. stocks had performed overnight. You can see that being dragged down by the Nasdaq 100. So the Nasdaq was down by 1.7%, dragged down by Apple and Tesla. The electric car maker tumbled more than 4%. Now let's take a look at Asia here. Also looking at a muted start. You can see the Nikkei 225 down by 0.12%. So not a pretty picture for the rest of Asia here. We're still looking at other markets that have yet to get the data in for us from Bloomberg. Now, let's take a look at our own local index. Recall that yesterday was a green day. That was on the back of the optimism of a vaccine start. It seems like a pullback is underway. Probably some profit taking here. That is down a little bit by 0.09%. This from PNB's Wendy Estacio. We see this uptrend, however, to be sustained, at least in the short term, because of the developments of the vaccine rollout. We will be having more developments, and we're waiting on that for this week. Now, one sector to be in focus, however, are the financials. This comes as we have new data in terms of the growth of the bank loans. You've got Philippine January bank net loans down by 2.4% year on year. That is compared with a 0.7% decline in December. Meanwhile, you've got the money supply for January up by 9% year on year. That is a slowdown of the growth of M3 compared with 9.5% growth that we saw year on year in the previous month. I just want to take a quick peek at our financials here. Our CBC leading the charge up by 1.7%, but the rest of the sector down by 0.2%. Now, I want to focus on one particular stock here, Security Bank. To break, of course, their earnings. 2020 net income stood at 7.4 billion pesos. That's on the back of revenues above 50 billion, so 50.4 billion pesos for Security Bank. And net interest income actually up by 14% to 30.6 billion pesos. Revenues were up by close to 50%. They also mentioned, however, that their non-performing loan ratio was 3.9% at the end of 2020. So it's better than what it was in the third quarter, above 4%. Security Bank trading in the green, now up 10 centavos, up by 0.08%. Now, here to chat with us about all of these developments and other specific marketplace, we have with us Royce Aguilar of First Metro Securities. Good morning, Royce, and welcome to the broadcast.
Hello, good morning, everyone.
Royce, I wanted to focus on specific sectors and stocks, if you don't mind. Let's kick off with the telcos, especially after all of these announcements from Dito. There's going to be the rollout on March 8th. But apart from that, they are also looking into going into broadband. How competitive do you think they'll be in that specific space?
Well, at the end of the day, they have so far they have the financial backing. At the end of the day, it's all about execution, which we will still have to wait for developments. Right now, it's too early to judge the success, how big of a success they would be able to meet. Because at the end of the day, you don't only have PLDT Globe, you also have Converge in the space, and you also have other companies that are interested, not only local but foreign, who are trying to venture into that specific space. Especially the goal of the government right now is at least some part of the government's goal is to limit or at least to open up to foreigners. So there.
Royce, if you look at the chart here, it's pared back from its all-time highs. Are you seeing a declining trend now that the reality is here? There's less, let's say, speculation of whether or not Dito will actually deliver. And what? How can we understand what the fundamental pricing level should be?
Well, that's another thing to think about in terms of its value. But definitely, if I'm not mistaken, right now it's valued at 40 billion. That's the market of the company. So of course, we have to see the numbers kick in. But of course, the expectations for the first couple of years, it might incur losses mainly because it's still trying to spend um, to get that market share into get into the telecom space, right? So I think in terms of what happened, why did it pull back after the news? It's mainly because it's a sell news event. The stock market is a forward-looking mechanism, and if it does not see any positive catalyst or significant positive catalyst in the near term, it will not rally. So that's what we told clients that it might pull back after the news that they passed the technical audit because there's no, significant near-term catalyst. The next long-term catalyst is that the company will earn money, which in our view will take some time, which it is normal. So yeah.
Okay, so still take some time there to understand whether this value is already fully valued. But let's look at the incumbents here, Royce. You have Tel having performed really well during the lockdown. Is this something that is sustainable? Will Globe be catching up in terms of gains this year, especially as the market starts to reopen?
It is actually for PLDT. It is sustainable. Of course, there's that prospect of further reopening, but besides work from home, study from home is somewhat of uh, still a trend. So the PLDT will benefit more from that, mainly because it has more exposure in the home broadband space. For Globe, it can catch up. It can catch up definitely. It's just a matter of it's just that home broadband is now um, has more growth in the near term
Okay.
compared to mobile data, where Globe has more exposure in. So there.
Okay, so one to be catching up there, one that can still be sustained. Let's move on to the Meralco and the energy stocks, particularly the MVP group stocks. Meralco, or according to MVP, Atimonan Power Plant project could be a candidate for conversion into a gas facility, and this comes, of course, after Felix Mining says that the PXP part of the group bidding for Malampaya. What's going on here, and how does this relate to the figures of Meralco, which of course recorded a little bit of quite a slide in net income for the full year last year.
Well, in terms of, I won't necessarily connect the performance in the earnings, mainly because it was a pandemic year, so that is quite expected. But I would like to highlight earnings wise that fourth quarter was there was already a quarter improvement um, in the volume in the commercial and industrial sector. So that is a welcome development coming into the earnings report this year. In terms of their plan to venture into gas business, well, they already have the expertise for that one. So it's just a matter of execution, and I think a lot will be hinged on whether they can close the deal with the Malampaya stake. So nevertheless, they have the expertise. It's just a matter of where they would put the situation in, because probably if they don't get the malampay stick deal, they would have other um, strategy in terms of venturing into the gas business.
How bullish are you, Royce, on this utility? Usually utility plays are defensive plays during financial crisis, but this in particular is very dependent on the reopening of economy, on people going back to their offices. Is the resident? Do you see that the residential part has been taking the bearing or contributing towards the losses from the industrial and commercial areas?
But yeah, that's actually a good point. Well, coming into this year, definitely you must have at least some part of defensive in your portfolio. But for us, most of the allocation should still be under the reopening winners. So that's your property, retail, financials, right? So nevertheless, of course, a good risk management portfolio must include defensive names, and one is Meralco. And of course, while we expect stability, there's still near-term growth prospects, because as you mentioned, while residential may lag a bit this year in terms of growth, you have the commercial industrial to pick up the slack amid the ongoing reopening prospects. So of course, there's a story, but the numbers already speak for themselves, given the trend that we saw in Meralco's earnings last fourth quarter.
Okay, so some room to run there actually. Now, finally, let's take a quick peek on the property space and on the REIT in particular. You've got RLC saying that it intends to list the REIT within 1 year. They're now starting to pick banks. Can you somehow compare the two, RLC versus Double Dragon?
Well, I think for RSC, I have to wait whether which properties they will include in the REIT. Because for example, for example right now, let's compare DD REIT and A REIT. For A REIT, it has growth prospects also. DD REIT also, but what we tell to clients for DD REIT, the exposure to Pogo is somewhat um, to put in our watch list, into something to find out in terms of the trend, in terms of whether the government will crack down on them or not. That's the main difference. For RSU, we have to see whether they will have that much huge exposure to Pogo, and if not, definitely there's more stable um, yields for that one. So yeah.
Okay, so you're looking at the Pogo exposure to determine this. And finally, Royce, on the Double Dragon REIT, so that's already right now being offered, but it's between 2 pesos to 2 pesos and 25 centavos each. How do we know in this case what is a good price for the yield that they're giving and the risks that you're taking, given of course that you have vacancy rates in
Yeah,
case the Pogos have to exit?
yeah. So good question. Actually, if I'm not mistaken, for DDD, when it's priced at 2.25, you have around yield of lower, slightly above 5% yield, which is actually a bit lower compared to when E-REIT listed. But the main difference for DD-REIT is it owns the land. So
Okay.
besides the recurring rental income, you have the land appreciation to you have that upside under the for the land appreciation. So they have different moving parts, right? So for us, I think DD-REIT is valued well, either within 2 to 2.25. But of course, as with all instruments, investment instruments, there comes a risk. And for DD, it's just that it has that Pogo risk exposure that bears with it. But again, management mentioned that these Pogos have 12 months exposure, or rather, they pay 12 months in
12
advance.
months in advance.
Should they exit immediately, the company has 12 months to find new tenants. So that's their argument for their exposure. So
Okay, so still some risks on the table there, but in terms of pricing, it's not. It actually seems to be a fairer price for you. Thank you so much for those insights. That was, of course, Royce Aguilar, First Metro Securities.
thank you, everyone.
Okay, checking in on the other headlines, we're keeping our eyes on 2 out of 3 local employees, or employers rather, are planning to buy vaccines for their workforce. That is according to a survey from global advisory firm Willis Towers Watson and the People Management Association of the Philippines. In February, the same survey showed that 65% of Philippine employers have already made arrangements to buy vaccines. Now, among the employers who have not initiated the procurement of vaccines, 58% are already considering doing so, leaving 42% with no plans to buy doses for their employees. Meanwhile, labor groups are opposing the supposed efforts of some companies to adopt a no vaccination, no work policy. The Associated Labor Union said it received complaints from workers that they are being required to pay for their own doses under threat of getting barred from the workplace if they don't. Recall that Trade Secretary Mon Lopez said employees should be given the option to decide whether or not they want to get inoculated. Now, over 100,000 live hogs have been transported to Metro Manila since February 8th. The Agriculture Department said Calabar Zone has provided the most live hogs at over 51,000. That's followed by Western Visayas with about 14,000 in Mimaropa, which contributed to over 10,000 live hogs. The government is still subsidizing the transport costs of farmers to encourage shipments to the capital. This after the retail price of pork in NCR topped 400 pesos per kilo before the government stepped in to cap the prices to keep inflation under control. The government is pushing for the passage of 25 priority measures before the year end. You can see that on your screens. The 12 priority bills targeted to be passed by June include the last 2 packages under the Comprehensive Tax Reform Program, as well as the Guide Act. Also included are revenue-generating measures such as amusement taxes on digital platforms and online sabong, along with establishing a tax regime for POGOs. Other priority measures include amendments to the measures like the Public Service Act and the Foreign Investment Act. Acting Socioeconomic Planning Secretary Carl Kendrick Chua, the head of the Legislative Executive Development Advisory Council, or LEDAC, said these bills are crucial in ensuring the country's economic recovery and development trajectory. The LEDAC also identified 13 more priority bills to be approved by December. Notably, that includes a measure to revive the death penalty by lethal injection for drug-related crimes. And that's the first look into the business day. Today is Wednesday, March 3rd, 2021. Catch Business World Live for the market closes at 3:15 p.m. today. I'm Danie Laurel, and we are One News.